India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a fresh new week. It's, of course, the week where there's a market holiday as well, 15th of August. So holiday shortened in that sense, but there is a lot to track in terms of what's left off and what we carry over into the new one. And, of course, newer cues as well. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Mangalam is here with us today. Guys, hi, good morning.
Good morning. You know, if you saw the market on Friday and you saw what happened all of last week, you wouldn't believe what happened on Monday already. So it was a volatile week, but ended well.
Yeah.
Now, again, on Monday, there is always some sort of volatility that starts on a Monday. Towards the end of the week, everyone's digested all those news. So we start with a fair amount of news on Monday.
Well, bulls will be feeling good on this Monday in comparison to the last one.
Yeah.
And the other good news is the Japanese market is shut as well.
Right.
So the troubled one is asleep for now. Let's see whether or not we can build on the gains, because now the bulls are feeling much, much better in comparison to what we saw, say, on Monday evening.
I mean, actually, it's quite incredible, guys, that I was looking at, some of the markers for stress in the system. They've all basically gone back to where they were on the 2nd of August, which is the Friday last. Not the last Friday, but the Friday before that.
Yeah.
So, things have kind of evened out. Not that, it's all clear and it's all sort of absolutely fine. But let's just quickly begin with what you need to know as we begin another week, actually. So after all of that volatility that we saw, and by the way, last week was a big week, right? I mean, it was crisis grade in some senses, especially that Monday and Tuesday, up there with 2008 and 2020, especially if you looked at the implied wall across markets, across currencies, etc. So there was no doubt that this was really big. It was very short-lived, but it was big when it happened. But after all of the volatility, if you look at what the S&P 500 are at and what the Nasdaq are at, they are on the last Friday, they left off around or exactly at where they were on the 2nd of August. 2nd of August is when you had that US monthly jobs data, which sparked this fresh panic. I mean, the JPY thing was coming, and then it kind of accelerated and snowballed with the US jobs data. So Friday to Friday, you essentially are at the same levels. The wicks will come up on your screen, the one before this, and that is at 20.37 last Friday. Guess what the price was? The 2nd of August, 23.39. So you're actually a little lower on the CBOE wicks. USD JPY, it left off at 146.63 as opposed to the previous Friday when it was 146.54. Now, of course, for the JPY, it started falling from, I think 155. So it's basically still higher, much higher. The yen is much higher. If the week is the timeline, then you're basically back at the same kind of level. So and on Friday, the stabilization continued. So markets stabilized. It was a quiet Wall Street session. Now I'm talking about just the last Friday. Equities steadied as well. So the S&P was up about 0.5%. Nasdaq was up about 0.5%. The 10-year, it lost about 5 basis points. We are back under 4%. Just under 4%. But we've been there, about 3.99 and around ththese levels for the last 2 or 3 sessions in the U.S. now. The focus in the U.S., although, people have pulled back a little bit from sort of calling a U.S. recession and, the growth scare is a little less now. But I think, a lot of the focus will still be on these things. So U.S. consumer data in the form of consumer earnings and retail sales, and then you get the core CPI. But I think the more important thing is going to be the health of the consumer, and the former will sort of overwhelm the latter, which is the CPI itself. The inflation numbers itself. So in a way, what is more important in that sense for policymakers is the economy and not inflation so much. Now, Fed speak in terms of what Fed officials will say, and there will be lots of it sprinkled through the course of this week over the next 5 days, will be important to follow in terms of how they are looking at all of this, because at the end of the day, it's the Fed reaction function which will matter. Circling back to what we are likely to see here, I just want to sort of leave you with some levels. The Nifty resistance is 24,625. So far we were looking at the retracement of the entire rally. You're now looking at the retracement of the last decline that we've had from the all-time high to the recent swing low. The 61.8% retracement stands at 24,625. We left off at about 24,400. So, I mean, that's about 200 points out. Support for the Nifty is the sort of low we had the day before yesterday, 24,079, which must be defended. Bank Nifty managed to have a close above the hourly averages, which we saw on Friday. On the way up, there are two levels in terms of resistance. The 40-day exponential stands at 51,055, and then you have the 20-day moving average, which is 51,337. And supports come in on the way down at about 49,659, which is essentially the swing low for the market. I mean, I think the GIFT Nifty is indicating an absolutely quiet kind of a start, 30 points lower, and I've been saying this, I think, since last Wednesday, the bulk of the panic, I think that is kind of behind us. There is a lot of talk about this Hindenburg report, which has come through over the weekend, etc. And we will see, how that plays out. But and I've been at the margin seeing people and hearing sort of market commentators say, well, it could have a 2-3% kind of an impact and this and that. I don't see any reason why that at the margin should be a new sort of, stress point for the market as such. We'll talk about the news and we'll talk about the implications of that as we go through the course of this show. But from a market standpoint, I think, we are going to sort of trade off the cues, both global and local, and not what came out from this report, which, of course, was on over the weekend. So I think that is a live issue, but not so much for the market as such. Guys.
Well, that's right. I think if you get a bit of a dip, that dip needs to be bought into, right, going by the current structure and going by all the data points. And now the bulls, from looking at defending the lower levels of around the 50 DMA, now all eyes are on the 20 DMA, and they'll be looking to climb that particular level. So that's going to be an important cue that we are tracking. HDFC Bank, that's been a relative underperformer if you look at it over a longer duration in the last 18 months or so. But in the last 10 sessions or so, well, that's been holding its own. And that's been the big outperformer, actually, as the markets have been brittle. And this week is a big week because you have that MSCI rejig that takes place. So HDFC Bank, that's the stock to track. And the next couple of sessions as well, that's going to be the flag bearer. So keep an eye out on that. The Japanese index, as I mentioned earlier, that index is shut, and that's been the volatile one. So that's good news from a bull's perspective. But we've got a lot of PPI, CPI, as well as retail data that we're expecting from the United States later this week in the next 3 sessions or so. So that's going to be important on the global front as well. A quick word on the ownership in the Indian markets. You're looking at the NSE 500. Well, you look at the FBI number, that's the lowest in the last 12 years. You're looking at the DI number, well, that's making fresh highs. And the retail number as well is more or less steady. So what I want to tell you is that, in terms of total ownership, the domestic money is far more important now. The FIs, probably they're getting to that stage where they can't sell no more because they're down to close around 18.8%. Let's see how that goes because they haven't really been supporting this market. Will they come in higher? That's going to be a crucial trigger as well. But let's focus on year-end now. In Friday's trading session, there was about a short covering that we saw. The Nifty, we did see the open interest was lower, the markets ended higher. And also the futures, the premium out there moved up to around that 30 points odd. In the previous session, it corrected from around 50 to around that 19-point mark. Even on the Nifty Bank, there was about a short covering that did play out, and that out there as well, the open interest was lower by around 5%. What about the FIs and the clients? Well, both of them are net long now on the index futures. The FI position, 22,000 contracts on the long side. So in a matter of a week or so, it's come down from around 1.6 lakh contracts to around 22,000, but they are long on the index. The clients, they were net short with close to 50,000 contracts on the short side. That's U-turned, 80,000 contract swing out there, and now they're net long with 35,000 contracts. A quick word on the Nifty options data. Well, the 24,400 call, 24,000 put, which perfectly tallies in with what we're going to tell you in terms of the numbers. So the 20 DMA becomes important. That's around 150 points away from where we closed out in Friday's trading session. That becomes the important mark. The bulls will want to get closer to around that mark because the last few sessions, we have been going to around this 24,350 to around 24,400. On Friday's close, in fact, it was in this vicinity, which is good news. Now the bulls will want to buy that dip today and get closer to around the 20 DMA, and that level should come up for you in the screen. I think the trend doesn't change unless we go ahead and break the recent low, which is at around the 23,800. So this 23,800 to around 23,900, which has a 50 DMA, become very important. But HDFC Bank holding on to the 20 DMA, that's been the level from where it's bounced. It's currently holding around there. So this is the stock, I think, that you need to track for the next few sessions. Mangalam, what else are you tracking?
Absolutely, Nigel. We'll keep an eye out on HDFC Bank. The MSCI flows likely. It's been an outperformer so far. The one data point that I'm watching out for, and that is the gauge of the fear and greed in the market, is the India VIX. On Monday, we saw the biggest intraday move that we saw in the India VIX. which we've seen all the way since 2015, August 2015. And in the interim, we had a bunch of wars, we had a pandemic and all of that and stuff. Nothing scared the market as much on Monday. And as we saw that up move, towards the end of the week, the VIX has actually now come down to around 15. So from 17, 18, thereabouts, it's seen a decline. So all of the fear has now seemed to be digested by the market. And we see that in the global markets as well. The US markets, after seeing some topsy-turvy moves over the first couple of days of the week, now we have, mild green triggers coming in for the US markets. And this morning, irrespective of the Nikkei being shut, we have the indices which are trading with gains of almost 1% at least on the Taiwanese index as well as the Korean index. And in that, the gift nifty is actually underperforming. It's down about 30 odd points. So the question then is that will this dip be bought into or not? And if this dip is bought, what is the upside? You guys have been talking about the 20-day moving average as well. So that's the one mark that I'll be watching out for. But apart from that, it is a truncated week and we do have a bunch of triggers this week itself. To start this week off itself, would there be an impact on the Hindenburg news, if any? That is something the street will quantify. The second part, because it's a truncated week, the holiday is on 15th, which is a Thursday. On Wednesday itself, we'll have both the Nifty as well as the Nifty Bank expiry. So that will play out. Then you'll obviously watch out for global markets and macros. You have a lot of data coming out from the US, be it in terms of inflation or retail sales, etc. And then finally, we have the last batch of earnings that the street will be reacting to. Siemens reported over the weekend, post markets on Friday, slightly softish set of numbers, solid set of numbers coming in from Jubilant Foodworks, etc. And over the next couple of days as well, we'll have a slew of earnings, none market moving, but a lot of them which will keep the broader markets afloat. So those are a bunch of triggers that we'll be watching out for. For now, 30-point downtick. Will the bulls take that? Perhaps yes.
Well, absolutely. And, it's a flattish kind of start. So on an even keel as we begin this Monday session. Jeff.